We just jumped down through a couple of slides. I'm sure everyone doesn't need to see my disclaimer. Okay, so not a lot of people know Gratifii, and we're very much on a path to becoming better known. We've to put it into context, over the last 2 years, we've grown our revenue from 2 million to close to 27 million, and continuing to grow with a compound annual growth rate of 36%. We're about 50 people. We've got 6 offices around the world: Singapore, Dubai, Johannesburg, Sydney, Melbourne, Perth, Auckland. And we've got a large 85 enterprise clients and growing, and a lot of those are real household names. Recently we've just signed Rest Super with 1.7 million members to access our loyalty and rewards programs. Market cap today is around 17 million. Said on a revenue of around about 27 million this year. Okay, so next slide. So how we're set up, we started out essentially as a technology company, and we built a platform called Mosaic that is the SaaS module that we give to every one of our clients to access all of our services. Now, that may be a loyalty program, it might be a marketing services program, it might be rewards content. All of our products come through a single platform. And that is our big competitive advantage. We've got competitors in the technology space, we've got competitors in the marketing space, we have competitors in the reward space, but we're the only people that you can just take one platform and that can deliver all of those products through the single platform. Next slide. I think what people don't quite grasp is the size of the market that we play in. People go, oh yeah, loyalty, that's, how big is that market? Well, as I said there, it's growing to $226 billion on a global basis. 90% of companies have some form of loyalty program. So basically anyone in any of these services, financial services, hospitality, retail, insurance, travel, sport, aviation, telcos, health, everything pretty much except mining companies have a loyalty program of in one shape or another. So the market for us to access is literally thousands and thousands of companies in Australia, Asia, Middle East and Africa that we operate in. So it's a huge, huge market that we're barely touching on in growing from 2 to 27 million in 2 years. So, we see continued strong growth. And in fact, post-COVID, we've seen a kick along where research has shown over 60% of companies have either increased or intend to significantly increase their spend on their loyalty strategy post-COVID. And also, as we go into an environment of higher interest rates, we're quite a defensive stock in that people are looking to get discounts off, whether that be movie tickets, dining, and a range of services and travel that we offer. We're seeing, strong pickup in all of those sectors. So next slide. So how we differentiate ourselves? We're a one-stop shop that probably sits in the nice fat middle of the market. We don't target the Qantases or Coles or Woolies at that sort of end of the market. And we don't do the SME side down the bottom where you pay $1,000 or so. That's not of interest. Our services, usually the bulk of our clients are paying us between $10,000 and $20,000 a month. Now, having said that, we've got a couple of clients that spend over $50,000 a month with us, but generally by number, most of our clients will spend $10,000 to $20,000 a month for our services. So the big differentiator is we're a one-stop shop. You know, when you go to the top of the market, there are big players like Oracle and Salesforce who will just give you the technology. Then if we look in the rewards sector, there are global players like Blackhawk and Rakuten that will just give you that piece. And there's a number of marketing services companies. But where our great advantage is for a mid-tier company, they come to one place with one account manager, one bill, one support, and we can deliver all those pieces in any mix. You know, some will take more software, less reward. Some will take more marketing, less software. But we can mix all of those pieces up to deliver a complete solution to sort of mid-range companies. As said, somewhere between 150 and 250,000 a year is our sweet spot. Okay, next page. As said, this sort of gives you a feel for our revenue growth. This is the cash receipt side. So because we are quite seasonal, that Christmas is a very strong period for us. Our revenue is substantially higher from the quarter than the cash. So cash has started to come in January. But as I said, we've got had a compound annual growth rate of 36%. We've had 7 consecutive quarters of growth. We've taken the business from in 2021, where it was doing $2 million a year revenue, to we believe this year we'll finish the year somewhere in the vicinity of 27, 28 million. And that's based on first half, we've done 13.5. Last year we did 12.4 of revenue, unaudited those numbers for a couple more weeks. But we've done more in the first half of this year than we did in the whole of last year. And we don't see the second half of 23 slowing down. So even if we keep it steady, that comes in at around 27 million for FY23. And we have no reason to believe at this point in time that there'll be any slowdown, as said, because we are seen as quite a strong counter-cyclical stock as people look for discounts on dining, travel, and all the different offers that we have. So next slide. So there you can see some of our numbers, and on top of that, Rest Super has only just gone live in the last week or so. So they are yet to generate revenue for us of any note. We also, just before Christmas, signed up Student Edge, which is 1.1 million students through their app. They've only just started to generate revenue for us. One of the most exciting projects we've got is on the software side. We're rolling out a number of medical centres, and the corporate that we're building this pilot with is a very large and fast-growing medical centre provider, and that contract has the ability to be quite substantial and almost company altering for us in terms of its scope and breadth. And we're building technology for the health sector that, as far as we're aware and this large provider's aware, doesn't exist anywhere else. Now that's loyalty, not rewards, that's pure loyalty. So that's about maintaining patient data, tracking, offering discounts if they buy additional services, x-ray, physio, dental, as well as doctor services. The more services they use within that medical group, that will generate discounts. Now, given we're reading everywhere that Medicare is dying, that people having to pay more and more and more for medical services and bulk billing is disappearing. This group believes this has got the potential to completely alter the way medical services are delivered within Australia. So it's a subscription-based model where you'll pay an amount per month and for singles, couples, families, and that will give you access to bulk billing and discounts on a subscription model. So very much loyalty driven, and huge opportunity for us in the health sector. So that's a very exciting project for us. Hachiko, which is the marketing services business, we only bought 6 months or so ago. We're just starting to get the first of the multi-product clients coming through from them. In fact, as I speak, we're doing a joint presentation for marketing services and loyalty and rewards with a very large household name that really wants to get everything from one place. So our strategy of delivering a very simple, integrated, one-stop shop to the middle market is really starting to take hold. Okay, next slide. And again, one of the great differentiators for us is we can operate in any sector. We do have, there are a lot of specific hospitality solutions out there. There are a lot of specific retail solutions out there. Whereas, what we offer is completely industry agnostic. It's a core, we can deal with, as I said, right now we're in the middle of doing a retail, a hospitality and a health implementation. Seagrass is 72 currently, restaurants across Australia, South Africa, the Middle East and UK. They're opening more than a restaurant per fortnight across those markets. So again, it's a rapidly growing opportunity for us going forward. And the next thing, we're rolling out retail for Fab Group in New Zealand for 72 skincare and cosmetic booths. Shops. Go forward. I touched on REST, adding 2.8 million people to our system in a month. That we can skip through that. Interesting. Recently, we've been awarded carbon neutral certification from Climate Active, which is the Australian-backed certification and one of the most difficult to get. So, we're very much focused on that, and as a consequence of that, we're selling. I think if you go to the next slide, the first ever in Australia carbon offset gift cards, which we see as a big growth area. There it is there. So look, we continue to see growth. The market we work in is counter-cyclical. We already have 70, 80 enterprise clients and growing. We're counter-cyclical, and the middle market is really delivering great opportunities and growth for us. So, we think we're in a particularly strong place right now. And 23, 24 looks, really strong for us. Thanks, Tim.
Thank you, Ian. Quite a few questions coming through here. Can you talk through the REST Super platform? I know it's only just kicking off. How does REST Super use that to benefit its members? And have you got any evidence with your other programs? Or perhaps I'll leave the question there and then I'll touch on the next question.
So interestingly, in talking to REST Super, and I can talk about this firsthand with my children, that people finish school, they get jobs in bars and open up REST Super, retail shops, whatever, and they might work there through uni and have some money in there, but then they get their first job and then they swap out to a corporate fund or one of the bank funds or something like that. So people, when they're 18 or 19, the campaign to say you get better returns really doesn't make people stick when you're 18 or 19. So what we're doing is saying, if you're a member of Rest, we can give you 30% off movie tickets. We can give you 30% off diming, 2-for-1 offers. Benefits you'll get today. Now, so when people talk about, oh, I'm going to move to a corporate fund, you go, well, are they giving you these benefits? So it's really powerful. They're benefits you get today, which for a 19, 20-year-old is far more front of mind than saying you're getting a 1% better return for when you're 65.
Very true. Also, can you comment on the kind of recurring nature of your revenue and how sticky are your customers? And once on board, how difficult is it for them to move?
Look,
awesome.
Look, I think, in the sort of last couple of years, out of 80 clients, we've had two move on, one through acquisition, and there's nothing we can do about that. And they're a very, very big player, very large financial institution that merged. Very, very low turnover, very low turnover.
And you've had some significant growth you've announced in your numbers. I think it was 35% compound annual growth. You've also made a few acquisitions during that period. What's the balance between where's your growth come from? Has it come from the acquisitions or
look, it's actually encouragingly from every part of the business. Sooner or later, there is only one platform, right? The acquisitions just mold in. We won't even keep their revenue separate or anything. You buy the platform and then you just select the services you want. So the concept of 3 businesses will disappear. It's just one business, one platform, and then you decide which services you want to take on board. So, very much, and I see this latest question, it is a lot of work on, building out the platform to be able to cope with all of these new functions and functionality. And then as well, because we're turning over so much now, we're moving to getting ISO 27001 certified, which comes with a cost. We're very, very cognizant of data. When you start turning over more and more and more, we don't want to Optus/Medibank type situation. So we've invested a lot of money in security. We're currently upgrading to till payments to get 3-factor authentication. So we're very cognizant of those type of things. So we're building a platform to allow us to grow to 50+ million off a very solid base.
I mean, there's a question that's specifically asking that in reference to your current platform. Is it sufficient for the growth trajectory you're kind of talking about or targeting over the next 2 years, or is capital required to invest more infrastructure to meet that growth?
No, we've made some big investments over the last couple of years. We've invested $6 million into the platform, into the IP, to allow us to do this. The only area that is of a lot of interest to us going forward is on the payment side. And if we increase our footprint on the payment side, there'll be additional infrastructure there, but it comes with a very, very, very good return on investment. So that's probably the only area where it's not in our current spend, but something we're looking at in the future.
Iain, thank you for your time. Great presentation. We'll follow with interest. We'll get you back on later in the year. Have a nice weekend.
Thanks, Tim. Cheers.